The regional bank debacle is still roiling the markets, and the debt ceiling mess threatens America's financial stability. What's ahead, and what does it mean for investors? I'm Merrill Brown. Welcome to Quartz Smart Investing. Each week we bring you one of the world's top investment professionals to offer insights you need to know. Our guest today is David Dietze, Managing Principal and Senior Portfolio Strategist at Peapack Private Wealth Management. Welcome, David.
A pleasure to be with you, Merrill.
Great having you here. The First Republic Bank collapse is the third major U.S. bank collapse in the last 8 weeks. Is this the beginning or the end of 2023's banking panic?
That's a great question. Jamie Dimon said there's renewed stability in the banking system. But, the fact of the matter is some of the conditions that gave rise to the collapses of those three banks are still with us. I mean, obviously, they focused on narrow clienteles, which ended up creating a lot additional risk for them. But let's face it, banks borrow short-term in the form of deposits, and they lend it long-term in terms of loans for real estate and so forth. Well, they make their money because they're paying very little for those deposits and getting more, that's the spread. But right now, we are in an inverted yield curve. What does that basically mean? Short-term rates are much higher than long-term rates. And so as a result, those net interest margins are shrinking rapidly. And many of the depositors are saying, gee, I've been getting 0, 1% and so forth on deposits. Maybe I should think about getting something more. And it could be as easy as just buying treasury bills for 3 months and get 4% or more. And so those are the pressures that the banks are under. And those pressures aren't going away.
And yet you are actually recommending a banking company at this moment in time, so there's opportunities for investors even in the sector.
Yeah, absolutely. So, what we're doing, the whole sector, we don't think is going to go away. Regional banks are important to the political and economic stability of this country. If you're a politico in South Carolina, you don't want to have to tell your local businesses, if you'd like to get a loan, put on your tie, go on up to New York City and grovel with J.P. Morgan. That's not going to work for the heartland. They want a couple banks in each state that are well established and are ready to help their local businesses. And of course, many of these banks will cater to people that want, just $1 or $2 million, not $10 or $20 million. J.P. Morgans and Wells Fargo's of the world don't have time to deal with them. So you need that base. So what we've been doing is looking through a sector that's just been devastated. In some cases, the indexes are down to levels lasting in 1990s or touched that in the great financial crisis, and looking at some of the best players there that we think will be survivors and rolling up our sleeves, studying them and potentially investing in them.
And you're recommending Key, I gather.
Absolutely. So KeyCorp, well, it's been around since 1849. So it's seen ups and downs before the Civil War, the Great Depression, and so forth, and come through very fine. So it's basically operating in Ohio, New York, and about 16 states in the so-called Rust Belt. What we like about KeyCorp is they're focused so squarely on that middle market, that market that's not going to be served by the Wall Street banks. At this point, they have a dividend yield that's close to 7% because the stock's been sold off. It's trading below tangible book value. And when you look at that dividend, they've increased that very nicely over the last 5 years. They've increased earnings very nicely. So we think it's a survivor. And at some point, we think, macroeconomic conditions will stabilize and you'll do well by investing in KeyCorp.
Well, speaking of economic conditions, there's great concern about the debt ceiling question in Washington and the gridlock around it. President Biden has said he's going to meet with congressional leaders on Tuesday, May 9th. What do you expect of that? I know you don't expect the country to fail. You've already said that in some of your writings. How does this resolve itself?
We don't know for sure, but, I take a page out of Warren Buffett's book, and he said that the country will not default on its debt. Somehow, some way, we will pay that. There's really no alternative to that. Now, how we get to that point, there's going to be a lot of hysteria and mudslinging and accusations back and forth, but at the end of the day, we will get to the table. What's going to drive that ultimately is going to be the people in Peoria, the people on Wall Street say this can't go on. Right now it's a very technical, wonky thing. The markets are trading near the high point of their range. They're up 9% so far. Who's concerned about what? People are going to still enjoy this weekend. But when the markets start to get really wobbly and we start to plunge there, and there's people who want to buy a home, can't buy a home, then all of a sudden they're going to circle the wagons around Washington, D.C. and get this done.
Last question, David. You're enthusiastic about technology, but not the big tech plays right now. You're not particularly interested in investing in Amazon and Microsoft, for instance. What does get you excited?
We're looking at the energy group, which we think is out of favor because for a lot of people, that's a non-starter politically and so forth. It's non-ESG. We think that basically the companies are being incented and told not to continue to produce more oil and gas faster than consumers are going to be able to wean themselves off. So there's going to be a mismatch. We think prices are going to go higher. We like this financial sector. I would broaden out not just banks, but of course, insurance companies and asset managers are also all down and so forth. Basically, if you look at the market, the top 7 stocks have accounted for 80% of the gains of the S&P 500 this year. That would be your Microsoft, your NVIDIA, Meta platforms and so forth. And that means the other 490 to us look very attractive because if you strip out those big 10, the valuations look far more reasonable and things are not picked over.
An interesting week ahead, to be sure, David. Thanks for joining us.
My pleasure.
For more of today's top business news and insightful analysis, stick with QZ.com. Thank you for joining us and tune in next week for another edition of Quartz Smart Investing.